I think the acceleration hypothesis is going to definitely be true in areas of the economy that have been in an extended recession. So areas like housing, for example, we're now seeing new homes slowly start to become more competitive. The cuts in interest rates are actually flowing through to lower mortgage rates. That is opening up some avenues of reinvestment in those areas. The real question, of course, becomes, is that actually the important metric or the important area for either the stock market or elsewhere? And the answer behind that is simply we don't know yet, right? We are very much being driven in terms of GDP growth by originally equity-sourced financing for the build-out of data centers. That's now increasingly moving to debt-based financing for data centers. That's where I think it gets a little bit dicier. The need to generate a return on capital for these companies will eventually have to play out. This could be a replay of the dot-com type cycle. The flip side of that, everybody keeps talking about this acceleration, with the exception of a crazy move around COVID. This is GDP on a year-over-year basis. From 2011 through 2020, the average is the dashed line. The red line is the average that we've had basically since 2022. They just look exactly the same to me. I mean, I don't see any meaningful difference in what has supposedly transpired that's leading to this confidence that we're going to see a surge in productivity, other than, of course, the need to have something along the lines of a narrative that matches an accelerating or a rising stock market. Earnings reports have been overall strong, and we've seen some recovery in the S&P 500 earnings, but the quality of those earnings have degraded sharply. We're seeing a much larger than normal spread effectively between GAAP accounting earnings and reported earnings. The Russell 2000 earnings have actually turned negative, which is a pretty shocking development, supposedly in an accelerating economy. And so I kind of just think people are trying to explain why the stock market is up and why they think the stock market will be up again without actually acceding to what I think is really driving it, which is simply the flows from passive investing.
This is one of the key stories that has been driving the markets and probably will continue to drive markets going forward.
Catch me daily on The Real Investment Show. The link is in the description.